helping limitations. These are the limitations that we are going to study in audit. And these limitations, sir, these limitations are something that has been asked so many times in exams, and these are scoring limitations. So you must go through them. So, okay, within 5 minutes, I'll be telling you these 5 limitations. I'll be giving us very simple overview of these limitations. I'll be providing the mnemonic codes to remember these limitations. And for those people, yes, you, who just wants to know what questions I am telling you, what topics I am telling you, I am doing this for you only in the beginning, that in the first 5 minutes, I'm going to tell you the whole concept of whatever it is that has come in exams and which is important. And in the whole audit, there are 5 kinds of limitations, 5 limitation related concepts that you need to know so that you don't end up confusing them or mixing them, right? So let's get back to doing limitation. Okay, the very first limitation is from Essay 200, which is chapter 1 of Inter Audit, and otherwise it is Essay 200. So first is inherent limitation of audit. Inherent limitation of audit, it simply says that because there is an inherent limitation, you can not reduce audit risk to 0, or you cannot give absolute assurance, which means you can give only reasonable assurance. And it says it is because of certain inherent limitations. Limitation is any hindrance, any block, any kind of, thing which stops you to do certain thing, but it is inherent, it is inbuilt, which cannot be removed, which cannot be avoided. It will stay along with the time. It will always be there inside. So first of all, what are the points? What are the codes for this? Fat. Who is fat? Somebody. But Fatto is my friend. I call him Fatto. Fatto is a lovely, cute name for the person. So Fatto is our code here. First is nature of financial reporting, F. Nature of audit procedures, A. Timeliness of financial reporting and balance between benefit and cost. And last one is other matters that add on to limitations or affecting limitations. So this is Fatto, which is topic 1. Now come to topic 2. In the same very area, there is topic 2, which talks about, that is Essay 210. It talks about limitation on scope prior to acceptance. You have not accepted the audit yet. You are just going for the basic discussion about the engagement, and you're asking them if there will be any limitation on any specific area. There will be an area which they will allow or not allow to check. So we are talking here about acceptance has not yet been done with respect to a new audit engagement. And before that only, we have come to know that there will be certain areas which we will not be allowed to check. And if these happen to be pervasive, these happen to be massive, then obviously we'll have to give a disclaimer opinion later on. So in spite of reaching to a point where we end up giving a disclaimer of opinion later, it is better you don't accept such engagement and just give up on that. So it could be because they are not allowing you to check big data, they are not allowing you to check a big asset, the amount of which is pervasive in the financial statements, not allowing you to check certain warehouses where the stock is lying, not allowing you to check, physical inventory, checking, counting, or anything of such sort. So wherever they are stopping you for any external confirmation or any such thing, all of these examples, if that's a scope limitation already that they have told you in the beginning, it's important that you give up on that audit. So third is change in terms of audit engagement. So this can be because of 3 reasons. One is change in circumstances. 2 is misunderstanding between management and the auditor, and third is by a limitation which has been imposed either by the management or circumstances. The third one is actually important for us because it talks about restriction on scope which is imposed by management. We are talking about limitation. This is a limitation. So first 2 I am just leaving for the time. I'll explain that later. And for now, if there is a restriction on scope by management or circumstances, then there are only 2 situations. One, either we'll find that restriction to be reasonable. There is a appropriate, genuine reason behind that. So we can agree on that in changing the terms of audit engagement. Although this will be a lower assurance level. So I'll give examples for that later. For those who already know, you just need to understand if it is not reasonable, then we'll not agree to the terms to be changed. And then later, one, we will not change the terms. And if they end up not allowing us, the management does not allow us to continue the engagement, then the option that is available to us is withdraw from the auditing engagement, or you can say resign from the audit engagement wherever law allows you. Also, if there is any legal or contractual obligation to be informing the TCWG or any other parties, you should do that. So this is third part. Fourth part, I'll simply take you to SS 705, which says limitation on scope after accepting the engagement. So limitation on scope after accepting the engagement means last one was change in terms of audit engagement after you have accepted the engagement. That means there was a change in what you are going to work on. So your scope of area was defined. It was now supposed to be changed. So the changes that were coming were basically one reason for the same, which we discussed, was limitation. But here, limitation on scope, which means you're not able to collect psi. There is a limitation on you. What could be that limitation? It could be like they are not allowing you to enter all the warehouses that they said they will be allowing you to check. And why are they not allowing? Well, they grow weeds there. So why would they allow you obviously there? Well, because you are an honest man and you are going to hack us and throw us into the legal hands. Well, then why did you hire me? Well, we thought your name is important for our organization and we will do the remaining audit through another auditor. So what do you want me to do? Basically, we don't think you'll be able to go there because there are so many, riots going on there, and we arrange those riots. You don't know that, obviously. There are so many riots going on, and because of that, obviously, you conducting the audit there. So we just cannot, afford to lose you. So I advise you that you do the remaining part of branches, and those specific warehouses or branches will be conducted by another auditor of that area who is known to the rioters. So he'll be able to manage. Okay, if you say so. Safety first. Yeah. So if a limitation has been imposed of any kind, like I told you about stock, it could be related to a debtor not being allowed to be checked. Why are you not allowing us to check this debtor? Well, she's my girlfriend. Any problem with this debtor? Yeah, sir. Actually, we had a quite a big time fight with this lady, and things are not going good with her, and she is going to maybe push us to court for this. And so we are just avoiding any kind of issues with her. But the amount is very massive. Yeah, I know. I am giving her that money. Sir, so what exactly do you think we should be doing? Alternate procedures? Sir, I am not sure if you can do that. Well, I'll need to talk to TCWG in that case. So you talk to TCWG, you provide them communication about all this. TCWG already knows this. Management obviously knows this. So the point comes, if you are not able to do it, so basically you are going to give a qualified opinion, right? In case where that is material but not pervasive. But if it comes out to be material and pervasive, then in that case, obviously, qualification will be inadequate, and in that case you have to do is that you'll be giving a disclaimer of opinion, right? So either you give a disclaimer of opinion or you may resign from the audit engagement. And resignation is usually done when a very small part of the audit has already been conducted, and so in that situation you can simply resign from the audit. But if a longer part of audit, 50% or something similar, substantial part has been done, you usually don't resign. Law says that you should carry on with the audit and you should simply disclaim the audit, and remaining the law has to see. You can simply report to the regulatory bodies also if you find something fishy. Last part is chapter 4. Chapter 4, limitations. Chapter 4, limitations, talks about rehuman laco Julie. Rehuman laco Julie. Rehuman laco Julie. This is basically limitation of internal control, and the points are: first is reasonable assurance only can be provided. Then human is judgment, human judgment in decision making with respect to the internal controls. Lack of understanding of how you are going to utilize these internal controls and reports generated. Lack of understanding the purpose of these internal controls. Then collusion among people, and JU is judgment by management. Management has to make certain judgments, estimates. So if they end up making wrong judgments, estimates here is about the risks that exist and the controls that you will apply to overcome these risks. Limitation in case of small entities. Obviously, Ramu is doing everything. from sitting on the, cash box, obviously sits on the cash box, and to getting something from outside, to giving everything, to, putting a broom and everything. Everything has to be done by Ramu. So there is no segregation of duty in that shop. So specifically in small entities, segregation of duties is not possible. So controls, even if you have applied, they can be overcome very easily. They can be, there can be loopholes, number of loopholes in those situations. So these are the 5 topics. And so for those who have just wanted to know the topics, this is it. You can just enjoy now. You can go back and study. If you already know these topics, it's wonderful. But for those who want to understand these topics, I'm just going to take a few more minutes of yours, maybe 15 to 20 minutes, and I'll explain all of this in a quick manner so that you can recall, retain, and easily understand the differences that these limitations have, and so that you don't end up confusing them or writing the wrong answer in any of the cases. Right, so we'll begin from the first one, inherent limitation. Okay, so inherent limitation. What is inherent limitation exactly? It's like the naughty kids in the house. Naughty kids in the house are going to do their naughtiness, and they are going to create the mischievous acts that they always do, and you cannot avoid that. So if you and your friends are together in the house, your mother already knows it's going to be quite a time. Yeah, she knows that. That is why she is not allowing you probably to bring your friends at your home back. So you just can't do anything about them. So these are the limitations that you'll have to deal with and teach while they are around. So deal with them. That's a limitation. Similarly, when we are conducting an audit, it says you cannot give absolute level of assurance, or basically you cannot reduce audit risk to 0, which means you have checked everything. That is not possible. You do sampling, because if you start checking everything, probably your articles are going to spend years over there to create that audit report, and they are probably going to be having kids at your clients' places only in the coming years, and they'll be married at that place only. So you don't want that. So to avoid all that, what we do is we do sampling, right? I hope you understand that much. So sampling is done, and sampling leads to a risk that because we are not able to check each and everything, we cannot provide absolute assurance. Absolute assurance is possible only when you check each and everything. Even then, we are humans, so we can also, we might end up not detecting each and every error or fraud, because frauds are done very, very smartly and carefully. They are, concealed, so you cannot easily find them. So coming to the point, auditor is not expected to and cannot reduce audit risk to 0, cannot therefore obtain absolute assurance that the financial statements are free from material misstatement due to errors or frauds. And this is because there are inherent limitations. Inherent limitation means limitations which cannot be overcome, obviously, and which are with the subject since the inception or evolution of the subject. So this is going to be always the case with every organization. You just cannot eliminate these limitations. So what are these limitations? First is nature of financial reporting, which means there is judgment involved in financial reporting of different kind. There is an uncertainty because of that. There is a risk because of that some figures, as much as you may try, will not always be perfect, because they don't go by thumb rule that it is a specific percentage that you need to fit. The law does not define those. It is left on to your discretion, your understanding, your judgment, your intelligence of what exactly do you think these figures should be. And that depends on your experience throughout the period of the business with people that you are working with. Suppose it is doubtful debt, it is a contingency. So that depends on your personal experience, right? These are subjective. Okay. In addition, many financial statements involve subjective decisions or assessments. What is it saying? Many items involve subjective decisions or assessments or a degree of uncertainty, like provisions, contingencies, as we talked. And there may be a range of acceptable interpretations or judgments that may be made. Obviously, from one person to other, it will vary. Mr. Ramesh says, who is an existing manager in the organization, that the provisions should be created at 10%. Mr. Ramesh, who has just come into the organization, says created at 40% because this party, I have a bad experience in the previous organization with this party. You better create 40%. They will not pay you. But the previous one says, sir, they have always paid us, despite the fact how many people they would have not paid does not make any difference. They always paid us. So there is a difference of, assessment of the things. So obviously, because of this difference, certain times we will not be able to justify the evidence, will not be able to say if the specific figures given are right or not. And in these things, manipulations can be done, which an auditor cannot overcome, which an auditor cannot really detect, because these are judgmental, uncertain things filled with risks. Nature of audit procedures. There are practical and legal limitations. So first of all, what is the nature of audit procedures? The nature of audit procedures is verificatory, not investigatory. Verificatory means we are here to verify the things, cross-check things. We are not here to investigate things. Investigation happens when you have a doubt about something, you have a clear indication that something is wrong. Then you start investigation. However, verification starts with the prima facie genuine acceptance of everything existing. So the nature of audit procedures are verificatory, which means also there is a practical and legal limitation on auditors' ability to obtain audit evidence. So practical limitation is we want to collect the audit evidence, but the organization is not ready to provide us intentionally, unintentionally the audit evidence needed. Also, it says in situations of fraud, when collusion is there, even if we want to try to ask, different people about information, cross-checking, we are trying to do inquiries, documents, everything they have fuzzed. They have already created a complete single scenario about everything. So it's like a friend goes, with a girlfriend out on a date and has told at home that he is going for the class, and his parents end up calling, and then the guy obviously does not accept the call. They end up calling you because you are the next best friend. So you pick up the call and you say, yeah, he was there only. He just went to the washroom. The moment he comes back, I'll tell him his mobile was just, lying around here. And they'll be like, oh, thank you, Ashok. And then your friend gives you a call. Your mother called her. You better give her a call before it gets fishy. So you give a call. So basically, you already decided everything. You have already colluded in a manner that obviously nobody will be, doubtful on you. There will be no skepticism on you. So to avoid the skepticism, what they do is they collude. They do everything very cleanly. All the versions of everyone, all that inquiries answered by everyone are same. Not an official investigation into alleged wrongdoing. This is from the part that it is a legal limitation. That is, we cannot go about becoming Singham and we go about, taking out our belt and dhar. We cannot start beating them. We cannot simply start, torturing them to bring the truth out of them. You tell me or I am going to kill you. I am going to give you the 3rd degree or anything of such sort maybe. So the legal limitation is that we can only verify. We are not gone with the investigation and we don't have any kind of powers that are given to any police or such kind of organizations. So that is our legal limitation. So in that case, obviously it means we cannot go beyond a certain level of procedures that we perform. As such, to find more truth is always not possible for us. We'll be under certain limitation. Timeliness. Since there is a date by which the audit report should be given, because they have to bring it out in their either tax audits, they have to submit it to an any regulatory body, or they have to bring it out in their AGM. So it has to be given in a certain period of time. So since we say if the audit starts here and the due date is here, so in between, if a specific information is available to us at this point of time, so we will be assessing that information and we'll reach to a conclusion by this time. So it is beneficial. The earlier the information is available to us, timeliness simply means within time, within a certain period of time, we have to finish the audit. But balance between benefit and cost, that is what I'm explaining you. The earlier the information is available to us, the more beneficial it is, because we'll be able to finish things in time and we'll be able to make the assessments in time. The later information is available to us, the lesser the time available, because it would have needed this much time to complete the assessment, but we'll do it in a hurry. So doing it in a hurry will obviously make us not check everything, and this will lead us to the point where we'll lose out on checking and finding errors or frauds, which might we have find if we would have checked it a little earlier. So some informations might not be provided to us in time, some informations might be delayed because of that, or some audit procedures we have to apply in time. So we should decide very carefully which areas we need to check in time, what information we need in time. So basically it says planning will always help us. Appropriate planning assists in making sufficient time and resources available for the conduct of audit. So you should always plan in time. Appropriate planning will help you get all the resources and also reduce the cost. Now, cost means that since you have to apply your articles and CAs, their time is the cost that you have to bear. Now, the time to finish is one thing. Time that is applied by, that is devoted by the personals, is the cost that you have to bear. So you have to see how many hours actually you want to spend over an audit. What exactly is the expertise you should devote to this audit, or what is the expertise that is needed in other audits. So you have to decide that very judiciously and cautiously. The matter of difficulty, time, cost involved is not in itself a valid basis for the auditor to omit an audit procedure, which says if a specific area is difficult, or the time needed is a pretty long time which may be needed to check something, or the cost involved goes higher, which basically is our time, hours spent devoted by our personnel. In these cases, you cannot take this as an excuse that because this is what is going to take, so we will not, like, it's too hot outside, I just cannot go outside and check so much of stock. It is going to take so much time. I'm going to be burnt. I'll have tanning of my skin. I just cannot bear it. Obviously, you cannot take any such, excuses. And since there is no other alternative, there is no alternate procedure to check it. Physical verification happens that way only. There is no second way to check, inventory. Physical verification is the only way you check the counting, you check the condition. So you have to do that. You cannot go about saying, okay, you give us a report and we'll just mark that, everything is fine. You may do that, but that is not the right way to do. So you cannot avoid based on this context. So this is basically a question which comes in a question form, this specific thing. This line is question. So if this question comes, you have to write this specific area. And if this line comes, this is also a question. You have to write this specific area. This is also a question. This comes, you again have to write this complete box. Okay. Now coming to this one. Notwithstanding this, the relevance of information, thereby its value, tends to diminish over time, and there is a balance to be struck between reliability of information and its cost. Before it said benefit in time. It said that a balance has to be maintained between benefit and cost. Sorry. And here it says reliability and cost. So basically, what are we trying to say here is the reliability of information. The more time we have to check something, the more reliable the information. The later it is given to us, lesser time we have to check it, and the lesser the reliability probably. And from which source it has been provided to us, that also matters. So basically, this reliability factor will also affect the cost. If you need an information earlier, if you need to check something and be more satisfied about appropriateness of it, you might have to commit more cost. Hiring experts, maybe getting more personals who are experienced from your team to conduct this specific area of audit. So the cost will definitely be involved, but reliability has to be seen. If that area is very relevant, material, and fraud risk factors exist in that area, you must always get these additional people come into action and check the reliability of the area so that it can be finished in time. So reliability and cost will have to be seen with an angle of materiality mostly, right? So hence auditor adopts only sampling. The result is sampling risk. Obviously, we cannot check everything, so we end up doing sampling, which represents the whole population. And as such, sampling risk is there, and this risk leads to audit risk, which further leads to, the problem that there is an inherent limitation to not being able to provide absolute assurance. Okay, other matters. It says limitations on auditor's ability to detect material misstatements are particularly significant. Certain subject matters. This is FRRF, as I told you. FRRF is fraud, particularly fraud involving senior management or collusion. If they have themselves, colluded, which we talked previously in the fraud, in our nature of audit procedures. Here we talked about this fraud involves sophisticated, concealing and all the stuff that they do. And we are obviously not trained. I'm sorry, here I missed something here. We are neither trained nor expected to be an expert in authentication of documents. Further, we don't have legal powers to search forcefully which may be necessary for such investigation. I hope you understand that much. So the last one is fraud. Senior management involved, obviously you cannot help it. It's a limitation that if they are involved, they would have concealed it in the best possible manner. The existence and completeness of related party transactions. Well, they have a related party transaction, a girlfriend, a relative, a director who is our relative, and we are doing transactions with them. Now the first thing is 550 asks that if there is any related party, you disclose them separately. But since we have committed a fraud, why would we disclose a related party for you to check it, right? So we are not going to ever tell you that. So we will hide it in the first place. So if we are not showing it only, how can you even go about checking the information? You'll consider that to be arm's length price only. And there is something more, of a complex transaction that they are doing. And it was on arm's length, near to arm's length, but a discount was there, or some other kind of manipulations have been done. You would obviously not be able to find everything about it till the time you don't know it is a related party. Or the way I talked in the previous video in professional skepticism, if you remember, that there were two organizations that were connected to each other, and there was some related party transaction with which they actually committed a fraud, and then eventually from one organization to another we came to know, because we were conducting the audit of both the organizations. If you don't know, kindly go in the previous video and you'll be able to understand that. The occurrence of non-compliance with laws and regulations. Suppose that their license has been rejected because of certain wrongdoings that they have done, and this has not been told to us, and the business is still going on, and these guys are just giving us the information of the business, and we are considering that to be right, and this would lead us to, or probably any such other legal things that they have not done, which might lead them to going bad in the going concern concept. Now, going concern, if it goes bad and we don't know any legal implications of something that they have committed, they have not told us, well, it's a limitation that we don't know about it. Future events or conditions. Since we have committed the audit of previous year, we cannot be sure about the future. Future is, unpredictable. So that is again something which is not something we can assure the users about. That is a limitation that we have on ourselves. It's not a limitation of conducting audit. It's a limitation we have that we cannot assure more than the information that is available to us. We can assure people about that only, that to a reasonable extent, but future assurance, sorry, we cannot provide that. So this completes our first topic. I'll take you to the second topic very quickly. I think I've already explained that. The first one, if there is a limitation on scope of audit in terms of proposed audit engagement, such that auditor believes limitation will result in disclaiming an opinion of the financial statement, he shall not accept limited engagement as an audit engagement, which means if they don't allow you to check a specific debtor, certain stock, why don't they allow you to check a stock? Well, that's weird. How can we allow you to check that? Because if you end up going there, you are a truthful man. You are going to actually nail us, and we don't want that. So we'll play a good character with you, and we'll just try to convince you that you don't need to go there for some reasons, just the way I told you, riots and all the stuff going on. So if they are already putting a limitation, they said that you can go about checking a specific stock or something like that, or they tell you that you cannot get confirmation from a debtor because obviously that's a related party, or any such thing. Stock lying at two other places, you cannot check because of the condition. The condition has gone bad, but we are telling them that the condition is good, so the stock values will be higher, whereas the truth is that the values have fallen down. It has reduced to scrap. So obviously if they are avoiding that, that means it is fishy. And if they are doing this in the beginning only, and we do understand that that can be fishy, we should not accept the audit engagement. Now, the second thing that comes is change in terms of audit engagement. I told you, one is change in circumstances, which can be reasonable. Second is misunderstanding. They told one thing and we understood the other thing. There was some misunderstanding between the team member and their members. So we ended up starting with a wrong type of audit, company audit to tax or tax to company audit. And then within 2 days, we came to know that, things are going wrong. The management came to us and they told us that we are conducting the wrong part. So they wanted us to change the engagement letter. We can obviously do that. That is reasonable. But the last is restriction on scope by management. This restriction on scope again comes in the same manner. They told us that we are going to check all the branches in the beginning, but later they stopped us. Why did they not, tell us in the beginning? Because they told Mr. Rakesh about this, and Mr. Rakesh obviously felt something fishy, so he didn't accept the audit. So they didn't do that to us because they knew we will also do the same. All the chartered accountants are smart. So what they did is that they allowed us in the beginning. They didn't say anything, no limitation at all, sir. Obviously, everything open-ended, sir. Whatever you want to do, Gagnum open style. They wanted us to do and come and do the audit, but eventually they reached to the point that, sir, you cannot go about checking 2 of our branches because there is riots going on there, and we cannot take any kind of risk on your life. You are precious to us. So they ended up doing that, but we did realize that there is something fishy. Well, in that case, we will not agree to the terms. But if we could not really reach to that point, or there was something reasonable, there was actually flood in an area and they said there is flood going on, or there is a COVID situation in China and we obviously don't want to go there to conduct an audit. So we will avoid that. Obviously, that is reasonable. So we'll agree. But otherwise, we will not agree. And where we don't agree, we obviously want to pursue with the audit that we are conducting already, in which case we will want to, either find some alternate procedures or either end up disclaiming. So we ask them, they don't allow us to conduct the audit. Now the options that are available to us is either withdraw, resign, and if that law permitting us means we have done only a small part, not a substantial part. In that case, we can resign. But if the law does not allows us, why? Because we have done substantial part, or because the law has specifically asked us to conduct an audit on their behalf, and in that case, they want us to tell all the information, whatever the truth is, and whatever limitations they are putting, will simply tell it to the regulatory body. They'll deal with it. So we just have to create a report and disclaim it, right? And if there is any contractual or legal obligations, we have to deal with that also. Legal is basically as per law, contractual is as per agreement. If we are supposed to, before withdrawing, tell the TCWG, we will tell them about all the situation that is going on. Okay, this brings us to the fourth topic. Right, so this is limitation on scope after accepting the audit engagement. The previous one was after we have accepted, they asked us to reduce the audit. They asked us that you cannot go for 2 branches, although that was covered. So they are trying to reduce the scope of the audit. So the terms are changing. Basically, the terms in the audit engagement are changing. Tax audit was asked, and then they say that you should not be conducting the tax audit because we don't need that. Why do you not need that? Because, or probably a voluntary audit was conducted, and they lately say that you can conduct the TDS audit because we know you are going to find the loopholes and the evasion of tax that we have done, and then obviously you're going to lead us to the point where we will be caught red-handed. So we don't want to do that. This is not that they are telling us, that they are thinking this. So they asked us, sir, we don't need that really. It is going on, and another auditor just came. We had a deal with that person. So they will conduct it later. We don't really need it right now. So we'll do that. Don't worry. You just do the TDS. Reducing the scope. Terms of audit engagement changing. That is a different thing. This is scope after accepting the engagement as limited. That is, they are putting a limit on the audit procedures that we want to conduct. Now, they told us in the beginning, if you remember, they told us debtors will not allow to check a specific debtor, will not allow to check a specific stock. We did not accept the audit engagement only. Now, while conducting the audit, they are stopping us to check it. You're getting my point? The previous one was related to branches. That was written in the terms of audit engagement. They didn't allow us to go there. Terms of audit engagement are changing, right? This time, the terms remain the same. Terms have not changed. They did not come to us to tell that terms have to be changed. Now they are putting a limit on checking a certain area. They are not allowing us to check a certain asset. They are not allowing us to take an external confirmation from a big data. They're not allowing us to check a certain warehouse where they are obviously keeping weed and all the stuff that gives you nirvana feeling. So in such situations, the simplest thing that you have to do is request for removal of the limitation. If they do it, very good. If they don't do it, go to TCWG, tell them about that, And if the TCWG, when you talk to them, you should also check whether alternate procedures can be applied to such areas. Then qualified opinion, it says if they still don't agree to remove the limitations, in that case obviously what should you do? The only option left with you is that you'll give a qualification, which means you'll simply put into your audit report a qualified audit report, and you'll put under a limitation para that some limitations have been put on you, right? If any could be, and obviously it is material but not pervasive. You have to keep that in mind. It is not substantial. It is to a small extent, but it is above the materiality limit that we have defined for the whole financial statement. Now, if the qualified opinion is not sufficient, which means there is massive amount, that is pervasive amount, which is going to affect the whole of the statements, in that case, obviously, what are you going to do? You'll have to definitely go for a disclaimer, or you can resign. And that goes exactly the same as we did it in terms of audit engagement. So it is pervasive, and qualification would be inadequate to communicate the gravity of situation, the reality of situation. Resign from audit where practicable and not prohibited by law regulation. That is, they are not stopping you from resigning. But if the next one, if resignation is not practicable or possible, practicable means substantial part has been covered. Here, practicable means substantial part has not been covered, small part has been done, obviously you can resign. Here you have done almost 50 or more than that, then obviously you have to keep going. And law, if they have themselves appointed you or they push you, even if you have a word with the regulatory body, they say you do the audit and you give the audit report, you provide us all the details, we'll deal with it. Disclaim an opinion on the financial statements and explain the scope limitation in basis of disclaimer of opinion paragraph prior to resigning. And also you need to understand here is that you need to tell, in the first case where you're resigning, you should tell to the regulator or to the TCWG about if there is any responsibility to do the same. Last part is chapter 4. Chapter 4, limitations. Chapter 4, limitations, talks about Rehuman Laco Julie. Rehuman Laco Julie. This is basically limitation of internal control, and the points are, so what are these points? Limitations of internal controls, that internal control, however good you apply them, will provide only reasonable assurance about achieving entities' financial reporting objectives. Reporting objectives are basically to provide true and fair view, right? Human judgment in decision making can be faulty, and breakdown in internal controls can occur because of human error. Now, first is decision making. The specific area where you were supposed to apply a authorization mechanism. Now, if you ended up taking the wrong decision, who should be beneath whom, and who should take responsibility from who should, connect with whom to provide an approval for a loan system or something like that, or a purchase requisition. If the duties assigned go wrong, then obviously there is a loophole, and that will lead to, situation which is limitation for internal control. That can happen anytime. Another is breakdown in internal control can occur because of human error. Mr. Sukija ends up sharing his password with Mr. Saluja because he was not able to type it in his keyboard, or probably he was having some issues that day. He asked Mr. Saluja to do it. Mr. Saluja ended up helping and obviously remembered. So he, in the same day, on the very same day, he passed 5 loans of 500 crore rupees. Mr. Sukhija became Mr. Dukhija. So now the situation is that no matter that, because of his mistake, the whole loans have been disbursed, and 2 years later, he comes to know that a loan of without checking the credibility have been passed, and that happened the same day. He shared the password. So that's an error. Lack of understanding the purpose. Operation of a control may not be effective when it is saying basically that the internal controls, however effective you have applied them, will not be effective if the exception reports generated are not utilized in the right manner. If alarm comes out because of a specific transaction that is taking place, and this alarm should be, or this exception report should be taken in action on in the timely manner, most timely manner, to avoid any more such instances, it should be working as a detective mechanism, that now an error has occurred, now an issue has occurred, some kind of wrong transaction has occurred, you should avoid that in future. But the guy sitting says, we will do it after a week, after we have a batch of such transactions with us. So that is going to screw you like anything. Is not effectively used, such as where information produced for the purpose of internal control, like an exception report, is not effectively used because individual responsible for reviewing information does not understand its purpose or fails to take appropriate action. So, you know what is going to happen, obviously, if you don't take action. That is going to cost us, just the way Mr. Sukhija Saluja happened. Collusion among people. More people are colluding with each other. So basically they end up, committing greater frauds very easily, because all of them will have the same versions to speak, and they will obviously synchronize everything in a manner that it will never look like a fraud. It will look like a simple transaction that they committed, and their pockets will be filled up. Judgment by management. This is basically in designing and implementation of the internal controls, understanding the risk areas and applying the right kind of controls. So if you end up losing sight of the right risks that you need to cover, and you end up applying wrong controls in any of the areas, that will obviously cost you high in both the cases, because if risks are not covered, then also it is going to cost you. If the specific controls applied are not appropriate to the mark, automated, manual, semi-manual, or authorities defined, approvals defined, reconciliation systems defined, if theirs are not appropriate, then also it is going to cost you high. Limitations in case of small entities. Obviously, Ramu cannot do everything. Ramu is going to be dealing with everything, sitting on the counter, sitting on the, providing supplies to everyone, putting everything in the carry bags, bringing stuff from outside, putting a broom, and every other thing. Ramu is doing everything possible in the world. Well, segregation is not possible. So he is the owner of the organization in a way. So he can do any kind of frauds. So this covers our all concepts. The first one was inherent limitations, which has FATO, its code, which is nature of financial reporting, nature of audit procedures, then timeliness of financial reporting, and balance between benefit and cost. And last one was other matters that affect the limitations. Then we came to scope before acceptance, scope on limitation on scope before the acceptance. So in that case, if disclaimer is going to happen, eventually we will not accept it. Then came terms of engagement changing, and in that third part, which talks about limitation, and it says if the reasons given are not justifiable, then in that case we'll not agree. Second, if we don't agree and management does not allow us to carry on, well, in that case we'll have to either resign or later give any kind of disclaimer. And specifically it says if there is contractual legal obligation, you better provide such information to TCWG or regulatory bodies needed. Then we reach to 705. It says limitation on scope after accepting the engagement. So basically it says first check out the level of limitation, and if there is a level of limitation, you should try to first eliminate that, and you should request them to eliminate that. You should tell the TCWG later, and then you should try to apply alternate procedures. If both things don't help, then sir, you are going to do what? You are going to provide a qualified opinion. And in providing qualified opinion, it further says if it is not adequate, it is inadequate, then you will disclaim an opinion. And you can also do resignation if the law permits you. That's it. That's the whole thing. And this is our internal control limitations. This is re human la co Julie, which means reasonable assurance it gives. Then it says judgment by humans, human judgment in decision making, then lack of understanding the purpose, and then comes the remaining three parts, which is collusion among people and judgment by management, and the last one is limitations in case of small entities. That finishes us with all the concepts with respect to limitations. I hope you understood them in the best possible manner. I'll like you to put a comment or advise if you like the way I taught you, and also put a comment if there will be something that you will ask me, that you will like me to talk on, provide you more teaching on. So keep studying very well. Limitations are definitely there, but keep studying. This is a very, very important time going on, very crucial time going on. Don't just let it go wasted. This is your life. It's in your control. Yeah, take care. Bye. Namaskar.